What's the challenge? The challenge is timing. To get the timing correct, we need somebody, some sort of HFT to buy the floor spread. In other words, what we're looking for in this case is the purple line. So we're looking for the purple line to start rising with no one-to-one selling on the Dow. In other words, if the purple line rises, we don't want the blue line dropping by the same amount. Otherwise, it's just fair value, guys. It's just simply fair value, understand? Simply fair value. So when we see the floor rising, when does that take place? Well, it takes place right there, right? See how far the floor rises? But take a look at the blue line. The blue line should have fallen by the same amount, shouldn't it? So technically, the blue line should have been, that's an arrow. Technically, the blue line should have been probably down here. The blue line is almost exactly the same price on a close-to-close price basis than it was before. In other words, I've got somebody now buying the spreads, and the only reason we would imagine that they would buy the spreads at that point is because they now think the top edge is now in on equities. Otherwise, why would they buy the spreads? And obviously what happened is that enabled me to step into equities, into this phase, get short equities, and Bob's your auntie. We were often running on the downside. We'd already got a spread divergence on the ceiling stuff, the red line and the blue line. We'd already got that ceiling divergence from an earlier phase. And all we needed to do, guys, all we needed to do, you can see that divergence there. You can see that they're all falling here. All we needed to do was find a level, wait for the buyer to step in here. You might be saying, but the buyer stepped in earlier on this previous level here. No, they didn't. That's not true. That's incorrect analysis there because the blue line had fallen faster than the red line. The purple line rise, right? So the blue line had already fallen faster. So that's gone way beyond fair value. That's actually more likely to be a buy trade than a sell trade. But that's what I'm looking for right there. That's what I'm looking for. And obviously when I get that trade in, Bob's your auntie. The spread is just completely closed and we are finished. We're reaching fair value prices. You can see because the spread is closed up, there is no spread. So in other words, this is off the trade now. This is not a trade. It's not going to be a trade anytime soon until we start creating what? A higher ceiling or a lower floor. So the purple line either goes straight up and we get another higher ceiling, or the purple line goes straight down and we get a lower floor, in which case we start working back into selling equities again. It's just a style of trading. It's like choosing to trade oil because of the crack spread skews, but then adding to that picture by adding in the euro dollar or the bond price or something along those lines, just to get that clarity that we've always wanted from the right trade narrative. Building a big ceiling or a big floor is imperative on these, because if we get it wrong, we still get away from the trade without losing money, right? So we understand that from when we're looking at oil. This is why we have these spreads, okay? So for example, we're starting to build a very low floor here on this red line, right? So we're building a low floor. So what do I need to see? I need to see the purple line divergent from the red line. Well, it starts to become kind of divergent here. But you can see what happened. If I got that trade in, which is a buy on oil, of course, then of course I've got enough room that should that drop and then this starts to rally, I still make some money. Now you can see what happened. This rallied. And obviously all that happened, of course, is because that rallied, we ended up with a buyer coming straight back into that. That's why we need to get that spread. That's why we need to have a low floor to go after, right? Otherwise, we're going to be in trouble. We're going to be pressed for opportunities here. Now, obviously, when that starts to rise, knowing that in a lot of cases it is a positive correlation and in a lot of cases it's a negative, that's not as good a trade narrative as the one we've just been talking about. It's not as good a trade narrative as the one we're talking about on the gold-silver rotation either, because this is a positive correlation a lot of the times. So this is a short-term trade. We already know that for the guys that trade this. It can turn into a macro swing. Now I like this because the floor is actually dropping again. And the overall ceiling is kind of a little bit supportive here for selling oil, selling the red line again on retests, which is a buy on oil. So I'm interested in looking at this again, but this rise in the purple line's taken out the previous high. That's that trade off the table again for me. And I'm going to have to wait for that purple line divergence against the red line just now. So that is not a trade at this point, guys. That is not a trade. I need to see that purple line dropping faster, and I need to see the red line preferably going up, and then we can buy some oil into that storyline right now, guys. That might be a trade. Might be a trade. Does that make perfect sense? This is absolutely golden. But if you get it wrong, guys, you'll fade and you'll fade and you'll fade and you'll fade and you'll fade away to nothing. And you'll wonder why you ended up with no money left in your account because you faded. It seems as if you were doing the right things. Well, you weren't doing the right things at all. You weren't even in the same ballpark. We didn't quite get the big sale on the euro dollar. That was a pity. We were obviously talking about getting that short trade from 60 and above. We thought probably around about 60 to 75 would be the perfect sell. So 60 to 75 we thought was going to be the perfect sell. But some geezer came in at 55s and sold it before it got to that price. And that's a little bit unfortunate because that would have been wonderful to complete today's magical storyline of buy side. This is an hourly chart, by the way, guys, an hourly chart. So obviously, if we take that down a time frame to the lower time frames, you might have been able to see why we never got the higher price. It just got jammed into that high print, right? Take it down even further to a 1 minute chart, you'll see what happened into the high print. You can see that we got a couple of level twos. You can see there we got a little level two get jammed there. Got a reasonable sell-off. We got a capper trade coming in at this price level here. And you can see they simply just kept working it, working it, working it, working it. If we look at that in relation to the shape of the treasury market, of course, what happened? Yeah, there it is, guys. Unbelievable, isn't it? We told you this yesterday. Did you see the opportunity to get the short euro trade where the treasuries getting murdered? Murdered? Why? Because if the treasuries are selling, yields are going back up again. If yields are going back up again, real yields will be going back up again. If real yields are going back up again, what do you buy? Dollars. What do you sell? Everything else that's paired against the dollar. So there's your opportunity to sell. There's your opportunity to sell. And there's your outcome, guys. Unbelievable or true? True, right? It's not my market. You know I don't trade the euro much, but if you were watching this, you would have known that that was a given sell, wouldn't you? You'd have absolutely have known that that was a given sell. And obviously you'd have been able to take action to get into that sell. Yeah, we're only 5 ticks away from where we said it would probably begin. We said 105.60s to 75s. You're only 5 ticks away, guys. Come on. It's an area. It's not a specific exact price. It's not scientifically proven that at 60 that's the price to get. We are in an area. But when you lose the value like this, that area drops from 65 70s, 60 75s, down to maybe 50 60s. You start dropping that area down to the 50 60s, and you start saying to yourself, well, you know what? Let's get busy, guys. Let's get busy. I don't know if we're going to get any higher with the yields going back up again. And you start selling into the 50 60 level here, wrapping into that massive opportunity, and down she goes like an absolute choo-choo train. Crazy or easy? Kind of crazy easy, isn't it, guys? Crazy easy. A little bit of both. A little bit of both, guys.